Hello everyone, this is Andrew and welcome again to my YouTube channel. Today we're going to talk about what are real estate closing costs. Now there's a lot of closing costs that go into the purchase of a real estate property, and sometimes we don't understand all of them, so I'm going to attempt to explain a few of them here. So of course we have every transaction to do with real estate requires a lawyer. A lawyer has a fee, usually it's a base fee that they charge for doing this transaction, which covers a lot of the paperwork and the legwork and the phone calls, and of course they charge for faxes and transfers and every little thing that you can think of. But there's usually a base lawyer fee. You can shop this around. Usually it's about, let's say, $1,200 to $1,500 for a transaction. And this will be on both sides, the seller and the buyer. Some of these apply only to selling and some apply to buying, which I'll let you know. So land transfer tax. This is a government transfer tax for transferring the title of the property from the old owner into the new owner. When you're buying a property, you pay this fee to transfer the property under your name. And this is essentially just a government tax to get money. And this can be quite expensive. Land transfer tax, it's a sliding scale depending on the value of the property. You can look up tables online, which will tell you up to, I think it's say 0 to 150,000 and then 150 to X and then so on and so forth. And there's percentages within, but this can be calculated. And there's even some online tools that you just put in the city and the property purchase price, and it'll tell you what the land transfer tax would be. Something to know, I'm in Southern Ontario, and most of, well, I can't say outside of Ontario, but pretty much all of Ontario is a single land transfer tax, which is provincial. But if you live in the city of Toronto, there's a double land transfer tax. There's one for Toronto and one for the province. So it can be more expensive to buy a property in the city of Toronto for that reason. A land registration fee, pretty much what it sounds like. It's registering the new, this one is the land registration where you're registering the new owner on title. I'm not sure exact cost of this, but it's only a couple $100. Title insurance is something that your lawyer is going to add. I believe it's actually mandatory in the province of Ontario. Basically what this does is it covers you for future problems with the property if there was a dispute on a property line or some sort of rental equipment that was supposed to be cleared but wasn't, and the new owners can't be, or so the old owners can't be contacted to rectify it because it's their fees to pay. Anything that basically is an oopsie or I didn't know, or something that the old owners are liable for but are not able to pay for or willing to pay for. It's just basically insurance on problems. There used to be a survey associated with every property, and so things like a property dispute would be known up front, but those are very expensive. They're a few $1,000s, and so title insurance is only a few $100s, and it protects you against future claims and stuff like that. Appraisal fees. Most institutions, well, all institutions and even private money lenders will usually demand an appraisal so that they can get an idea of course, if the property you're asking for a $200,000 mortgage, well, the property better be worth, they only loan out 80% of the value of the property, so they need to make sure that it's worth more. So they're going to do an appraisal on every single property, and this is usually $400 or $500 in Southern Ontario. Home inspections, now this would be your prerogative. It's not necessarily mandatory, but if you want to see the potentiality for repairs in the future, or if there's anything that you wanted to go back on the previous owner to repair before you purchase the property, then a home inspection. And again, this is a sort of $400 to $600 a fee. And they give you a report that tells you everything that they found, be it electrical, be it water drainage away from the house, the roof needs to be repaired, a foundation crack, etc. Interest adjustments. Now, depending on the time of the month when you're doing the transaction, it's not always perfect, and of course interest on mortgages and rental equipment and things like that is prorated for however many days of the month before the closing. So it's not always going to be on the first of the month. So they change the interest charges, and sometimes you might owe some, and sometimes the previous owner might owe some. And property tax adjustments. There are scenarios where the previous owner may have paid the property taxes for the full year. Depending on when you're buying the property tax, there's different installment plans. You could do a 6-month or 11-month. And if you've had a mortgage before, you may be familiar with the fact that the mortgage company may often charge or deduct the property taxes out of your mortgage payment. And in some cases, you may have prepaid, because it's basically just a kitty that they use to pay when it's due. So, and usually it's due three times a year, 3 times a year, 3 installments at a time. So their lawyers are going to sort of prorate that to see like who paid what and how much has already been collected and how much is owed, and then they're going to apply that to your closing costs. So at the end of the day, basically what the lawyers are doing is just making all of these adjustments and making sure that the numbers are lined up for what the previous owners owe and what you owe, and then the associated fees for doing all of the legwork and the paperwork. So I hope you've liked this video. I hope it was educational. Please give it a like and subscribe if you want to hear more. If you want to follow me, I'm at Andrew Cox, REI, on all social media. Thanks for watching, everybody. Take care.